Good morning, everybody. What a day yesterday. What a day. Right out of the open, right into the start there, just ripped and just kept going up. Good morning, Valley. So now, obviously, what's next? Well, yesterday started, right? Is a perfect example of waiting for the completion of the time frame you're looking for. Not that we don't, but I'm reinforcing the idea that what you see at the beginning of a time frame isn't necessarily what you're going to see at the end of the time frame. And so you remember yesterday morning, what we were looking at on the futures was a little red bar. I'm looking at the spiders here, but it was a little red bar there, and it reversed it, negated it immediately as it went up. So now we've got a wide range bar, not only on the daily time frame, but on the weekly time frame. In addition, we've got what we refer to as a greater than 100% retracement. So those things suggest that the move is going to stall. It doesn't mean it's over, but when we see a run up, and it started from this little consolidation, which was bullish, and so from there to there created the wide range bar in the weekly. So wide range bars on the time frame you're looking at after a move historically suggests the move is going to stall. And that's what we'll be looking for going into next week, as well as, this is the quarterly options expiration, quadruple witching, and, that unfolds, and it typically corresponds with a change. So now, doesn't mean this is going to end today. It could go higher a little bit, but typically you don't get another wide range bar of the same range the next day after a run like that. This also, also signals kind of like a Johnny come lately. Everybody jumping on near the end, not so much here where it started, but yesterday, how it ran up. So we got to be aware of that. And I've got this horizontal line alert under this bar. There's two bars there, but I started setting a lot of alerts on different stocks, not at the bottom of that bar, but in the lower third of that bar in different stocks, because that would be a pretty deep retracement. So getting ready for next week to see how far things retrace on different stocks that may retrace deeply into that bar. And then from there, what are we going to do with it? Well, that's the start of not necessarily fading moves in an uptrend, but, call spreads, deep retracements, especially if we were to get, I'll just draw it out because we're picture traders. We look at pictures. Let's see here. And we don't know what stock it might happen, but, anything where you get a range expansion bar like that gets negated with another range expansion bar, it's going to be a powerful turn. So one of the things we'll be looking for today and into next week. All right, so where do we go from here? What's the market doing? And we could see it's up here in the upper part of the range, looking at the futures. And they went from 4,400 to almost 4,500 in a day. Well, it's a big range day. Now, I just want to point out, so as I'm looking at this, I just want to point out that, well, this was the beginning of a move. So that was the beginning of a move. That one was the beginning of the move. That one potentially was the beginning of a move. The beginning of the move. This one had this pivot. Over here, we've got nothing over here to the left. You know what? We've got a wide range bar. So could it go sideways like this? It could. So as I said, when you see a wide range bar happening after a run up, it doesn't mean it's going to collapse, but it does mean the momentum is getting to a point where it's going to stall. In addition, you've got a below here, you've got a void because of that wide range bar, just blasted straight up. All right, SPX. So we were looking for 4,400 yesterday, and it just reinforces the idea of, that's the idea. But at the open, where things just blasted off, right, just took off like that, you have to make some adjustments in the moment. And so it's not always just a no-brainer to do it at the open, for sure. So now we've got some premium at 4,490, which isn't too 4,490 is pretty far. Is up there near 4,500. So that should be good, give or take in there. You got to watch, things are adjusting a little bit. Jake's got 4,385 down below. I've got my thing here at 4,380. So the bottom of the wide range bar, I can't, well, what can you imagine certain things, meaning I imagine after a wide range bar, momentum's going to stall. You can see I've got an alert here at 33, around 4,400. But it's hard to imagine that today, for what reason, prices would come all the way back down to negate this bar today. So, the bottom of that range there should be fine. In addition, the 80 is here. There's really nothing to the left. Well, it's what we call minor support, on the hourly time frame. It comes down, you got a little shelf right here, which is where things continued. When it got up here toward 4,400 yesterday, and then it started jiggling around, that's where it just took off again. This is a pattern that typically happens near a whole number and a larger open interest, where it chops around there for a while and then takes off. We had that discussion in the green room, I think, earlier in the week. All right. And Qs here are up a little bit. They're coming off of the high, but so far an hour range bar, similar pattern there, where things were down, and we pointed out this little pivots here to the left as we were talking yesterday morning, and then right at the open, it just took off and blasted off. And so now it's at this pivot, it's stalled. I'll say it again, I'll say it thousands of times, look to the left, and there's your reference point where buyers and sellers are going to be. Russell, backing off from the highs, still got room ultimately to what the destination may be. Those pivot highs up there, and you can see those little overlapping bars. There's some congestion where it's at right now. Let's take a look at the and you can see it over here, the daily chart. That's where it pushed up to a couple of days ago. But and here's an example. Breakout failure. We talked about that earlier in the week, this breakout failure and range expansion. But yesterday being the day that it was, this didn't come down anymore. The Dow from our reviews are up against its resistance area, close to 35,000. And yesterday's range expansion bar, the same momentum move, creating a void up above. Let's push this up here. So, and same thing, set alerts, even in the middle of the bar. There's set alert there. When in the green room, we were talking about setting alerts. Dan was trying to set alerts on TradeStation with lines. He said, this is how my platform does it. So my platforms can set an alert. If you put a horizontal line on it, you got that reference point like that, wherever you want to put it. Mine puts a little tiny line there, and this one's on a down arrow, and obviously the one on the upside would have an up arrow. But what's cool about this is I can drag this around and it drags the alert. In TC2000, it doesn't drag the alert. You have to reset it. All right, volatility index. I want to take a look at that. And it didn't go down yesterday. Remember, we talked about this, making that higher low. So some expectations here, maybe volatility starting to increase. Right, so far, it's just expectations. It is pretty low. You can see, just scrunching that up here. And interest rates. I'm look at this, how we look at any pattern. Right? So this is 13-week Treasury bill. On the rising 50 MA, pivot lows to the left here, momentum is stalled. And so now what we should see next week is that with the idea, and I guess into the next month, you want to keep an eye on this, so we'll be reviewing it, is that the Fed said, hey, we're going to pause, but ultimately, we're going to increase again with wherever he said 5.6, I think is what he said. This should start rising as markets anticipate that or not. And so there's opinions out there that they're not going to raise again. They're saying they're going to, but those are opinions. Let's see what the markets say. Does this start going up? Does it break down below these pivots? This is where we're going to, get the market's opinion, right? Everyone out there with ideas of these yields start dropping. Do they start going up? Is the 13-week a head and shoulders? Well, this really isn't a shoulder. I know what you're saying here, but here's what we would call a shoulder. This is what we would call a head, and there's no rounding shoulder here. It's just flat. But it's on all of these pivots, and what I was saying obviously was next week, do we see it start rising back up toward this high, or does it break below these lows? So anytime we see a head and shoulders high, ultimately, does it break the neckline? And it's no different here. If you want to view this as a head and shoulders, that's fine. What I would say is a better definition is what we call a shakeout pattern, which doesn't define it so clearly as a head and shoulders, meaning, like I'm saying, is there a shoulder, right? Shoulders have to suppose a rounding if we want to get technical about the exact formation, whereas an upside shakeout is a breakout, a consolidation, a breakout, and a deep retracement all the way back down to major support. So call it whatever you want. Does it break down below these pivots, or does it move back up toward this area here? And we'll be looking for this next week to see if it starts moving up. 10-year just flip-flopping back and forth here. We'll be keeping one of the things that we'll just be keeping an eye on. Bitcoin, that just kind of hung there. So just another thing we'll be watching since this, broke down there, and we'll see what it does. Right now, it's not doing anything, so stay away. Crude oil is down at support. It's hanging here. And it was kind of interesting. I think was it here? I forget exactly where it was, where they said the Saudis were going to cut production and things went up. No, well, they're still going to cut production. It came right back down again. And so now we've got pivot highs and we've got pivot lows and right, opposing views on a relatively tight range. We'll see what that does. There was a wide range bar the prior week, but so far it's working on a bottoming tail bar for this week. And gold. So what should happen here? Look at how gold is bottoming. So as we look at these intermarket relationships, so I see this bottoming tail bar. Maybe it was just yesterday being a bullish day, but this suggests higher. And if the Fed is going to raise interest rates, which we'll go back, we go look at the 13-week, well, this shouldn't go up very much. If you think, okay, they're fighting inflation. This is sometimes, everybody looks at this as an inflation gauge or the lack thereof. But sometimes, we've seen gold go up and it's like, where's the inflation? So it's not a no-brainer thing to look at as far as inflation or not. But right now we've got a range expansion bottoming tail, which, while we've got all these pivots here to the left, it's not a great setup, whereas we can get a retest of a pivot like this and a range expansion bottoming tail bar. Different formation with a little, more climactic, I would say, to the downside. Still, this suggests it's going to go up in the short term. And mostly silver kind of just doing nothing there. So we'll see what shapes up there and other sectors over the weekend, which, of course, we'll be reviewing in the advisory letter. We sent out an offer yesterday with the recording of MT Live, which we got tons of accolades about that particular MT Live. So, check out the recording there. And if you're interested in the advisory letter, there's a special offer there. Check it out. So, all yours, Dan.
Good morning. Happy 0DTE quad option expiration day. I've been reading that it is a record volume. A couple of $1 trillion are expiring. So they're either, going to expire worthless, or they have to roll them or monetize them. Those are the only human choices. And then that's what makes, obviously, the market move from all the hedging perspective that the market makers have to do to balance their books. Raul, NCNO. Yeah, catch up trade situation. Sure. You got to avoid there. Now, I made the comment in the room yesterday, whenever the broader markets are extended, I consider that like the tide or the wind or whatever analogy you want. That, if this starts to come in, then we don't have the tailwinds on new trades. So that's a little bit more reluctance on piling into more longs here. We're very heavily long in all three of our advisory letters. In fact, we only have one open short, and we only have a third lot left trailing this beautiful thing. We've been in it all week long. Crowd, Pelletier, crowd. Oh, we're in crowd, Thomas. So I don't know what you're asking now, but yeah, it's bullish. But I noticed it spiked up here pre-market. So I sent an alert out to sell a third pre-market at 163. But we're in it yesterday. Perfect entry. For a continuation, I would prefer 123. I mean, that was a big move to resistance. So you missed your entry for a new trade. Pelletier. That's what we call kind of a rising wedge. It's just getting on board a moving train. It's really, has to be your style, your pattern, what time frame, risk to reward, all that. I was mentioning that as a catch-up trade down here on Tuesday's gap up. IIPR, another bottoming pattern, we're long. And like I said, an alarm go off, up alarm. Let me reset it higher. That was another just beautiful bottoming pattern catch-up trade. We've been trading with the broader markets, of course, but it was also an excellent time. There were bottoming patterns and climbos left and right. Like, look at Nike here. We did a put spread on that 2 days ago, Wednesday. Now it's a 1, 2, 3 gapping up. That looks higher. Starbucks was a bottoming pattern. We have a short put. Southeast, ASO. Let's see, I just had an alarm on Redfin go off. This is a core watch of mine. I'm going to put this in a window now. Redfin. But the same, let's see how this is a totally different pattern to enter as a new trade than something up vertical 6 days in a row. So this one I don't mind. You just got to, still give it a big stop, and you still have the tide going out analogy. What's this? Ooh. Little bottoming pattern. Yeah, we should have been in this yesterday. That would have been a home run bottoming pattern. Somebody friend just texted it to me, and I said we missed our entry. Ride. Look at Ride yesterday. I missed this. That should have been in Greg's wide range bar scan, but nice close, bottoming. Look at the volume. Something's going on there. All right, Nike ADRT. I don't know, that's a big mess. ENVX. Alex talking about Waller. But it's kind of interesting. Yeah, they have all that talk. And then it reminds me of the saying, talk the equity market is telling the Fed talk is cheap. Because they're just not believing them. They're not believing we're getting 2 more hikes, even though he said it, right in your face. Like, I don't believe you. Well, I agree with that too. I 1,000% agree with that too. That I don't believe what comes out of their mouth. I focus on reality. All right, so this is a very interesting gap here. 1535. Let me look at my weekly, monthly. Has room. Let's put this on the list. I got Adobe on the other computer. See, great, the alarm going off on my other computer. That's why I turn them off. This constant bells are annoying. All right, so this looks great as a gap candidate. Crocs. It's, buy setup. That's a sloppy buy setup. I don't trust it because of the way it came down deep and controlled, but it's the start of a watch, Steve. KMX I've been watching here for a while. I wouldn't call it a core, but I think this thing might get $10 out of it. KMX, daily, weekly, monthly. We were talking about a core long and a SWK the entry was on Tuesday, but daily, weekly, monthly looked fantastic. So I started looking at KMX when Carvana, competitor, started acting bullish. SPY G, Greg, up alarm, where this is one of our opens and ETF letter. Set a new alarm. We've been, these big winners in the ETF, we've been slowly selling into strength, not looking to get in things. TNT. Yeah, we missed our move on that. Schwab, I've been watching this thing for months. This collapsed with the regional bank problems. Now it's a massive inverse head and shoulders. So ideally, I'm not going to be putting on swing trades today with option X, because this unwinding, some crazy moves can happen. But if this just has a nothing day, then I like this for next week. As a catch-up trade, right? It's weaker than the broader markets. So Home Depot, I just had an up alarm here. Nothing to do right now, but it's on my interest list for put spread, and depending on how it closes, will dictate. NUE came out with some revenue guidance. Look at space. They're sending people to, said they're gonna, send humans up into space. So shareholders are liking that. Adobe, I have as a possible gap and crap trade, but it's not ideal because it went sideways here for 3 days. But for 0 DTE, I'll watch it. Look at look at that gap in iRobot. That almost looks like a buyout. What the heck's going on with that? All right, I gotta shut off this bill. I hate it. Telegram, you are out of here. All right. Transports, we're still trailing a third. Look at this, man. Look at our transports. Now we got into all these things at the no-brainer breakout. And in Greg's commentary, I even remember him saying in the weekend letter 2 weeks ago, it's like, it looks like we got the green light all the way through option X. I mean, I've never heard Greg make a statement like that. Like, risk is on. Risk party's on for 2 weeks. And that's exactly what's happening right here. Now let's move stop days low now on this. 242.95. Greg, Mighty Mo alarm. Oh, actually, I take that back. IYT, we sold, and I said just to sell it into the close. All right, so we're out of IYT. I'll close it out later. MU bottom right Remember, we were talking you all over here. We were saying this is the area where it should turn. And it did turn, but I just didn't have a great pattern. It was gapping up this morning, and wow, that's a deep sell-off right here from that bullish gap. $3, 71 to 68. Wow. So nothing to do with it now. This ENVX gap I just mentioned. Coming in hard. I like bullish gaps to come in a controlled manner. All right, that's Redfin. Let's watch a gap